So wrestling money off of Uncle Sam. A couple different ways to do that. Tax credits, tax deductions. But what do they mean and which one is better for you? Coming up. First, we have tax deductions. Tax deductions, they lower your taxable income, which is the total amount you are liable for paying tax. And with deductions, in general, you have two options. You can go for the standard deduction, which is most common. It's a set fixed amount yearly. 2018, it was $12,000 if you were filing single. In 2019, it'll be $12,200. Or you can itemize your deductions, which is you take all of your qualifying deductions, add them all up, and if that number is bigger than what the yearly standard deduction is, you go ahead and you do that instead. So a tax deduction has the ability where it can actually lower you into a different tax bracket, so you pay a smaller rate on your taxable income. 90-second tax video on tax brackets up here. Check that one out if you don't understand how those work. But the ability to drop into a lower tax bracket, that is where a tax deduction could actually work in saving you some money. And then tax credits. Tax credits directly decrease the amount of money that you owe on your tax. For example, a $2,000 tax credit will actually lower your tax bill by $2,000. And some tax credits are totally refundable, meaning that once you get below the point where you've paid your taxes, what the extent that's left over of the tax credit will be added to your refund, putting more cash in your pocket. So in this scenario here, you have a $100,000 AGI, and on the left you are applying a $10,000 tax deduction. This $10,000 tax deduction brings your taxable income from $100,000 down to $90,000. That's not enough to put you in a lower tax bracket, but you're paying 25% still on the $90,000 compared to $100,000. 25% of $90,000, you end up paying $22,500. But with a $10,000 tax credit, your taxable income is still the full $100,000. You still pay the same rate of 25% for your tax bracket. 25% of $100,000, your tax liability is $25,000. But then we go ahead and apply the $10,000 tax credit to this. $25,000 minus the $10,000 credit, and your total tax bill is $15,000. So the $10,000 tax credit ends up saving you $7,500 more than a deduction of the same size. And that's really all for this one. This is a concept a lot of people really get confused. They'll argue about, but this is the difference between a tax deduction. It lowers your total amount of taxable income, so you will pay the amount of taxes on a lesser income. It actually could drop you into a lower tax bracket, but a tax credit lowers your tax bill completely right off the bat, and it's going to end up meaning a lot more for you money-wise. A lot of them are refundable, so what that means is the extra will actually roll right into your tax refund. Pretty simple one here, but it's something that needed to be talked about. Thanks for watching. Hit the like button, subscribe. Comment down below, say something nice, say something mean. If you say something mean, tune in again next time so you can say something mean again.